On today's episode of the AI Investor Podcast from 24/7 Wall Street, we jump into the new year and discuss the latest AI breakthrough that's seriously raising some eyebrows and share a brand new trade to kick off 2025. All of that is next. Welcome back to the show, everyone. I am David Hanson, joined by Eric Bleeker. Eric, Happy New Year. I think we're still within the grace period of it being okay to say Happy New Year. So Happy New Year to you.
I think you get 3 days and it's January 3rd. So you nailed it, David.
There we go. So we're into a new year. We've got the market. It's back open after a pretty quiet trading time the last couple of weeks of the year, although there were some stories that were coming out right at the end of the year that I definitely want to get to that were some real headline grabbers in the world of AI. But just kind of recapping the year we just came off at the market at large. We had the S&P 500 and the NASDAQ both up well over 20%. That's 2 years in a row now of 20+% gains. Doesn't happen often, although there have been several times in history where we've had these, big runs, and doesn't always mean that we're going to fall off a cliff. Sometimes we have seen a big correction after a big consecutive years of 20% gains, but we've also seen years where that rally has continued, most notably kind of in the mid-1990s, had some back-to-back 20% years, and then you had 30%. So kind of hard to say what we're stepping into, but we've talked a lot about it in previous shows. A lot of market enthusiasm. Again, I just said 2 back-to-back 20% plus years, but we've also seen some things come back to, maybe some normalcy, a little bit less insanity the last couple of weeks. So I just wanted to kind of get your take on, as we step into this new year, what are some things that is catching your eye from kind of that high level market perspective right now?
Yeah, we were seeing some of the enthusiasm kind of fade from some of the most notable stocks. Tesla had gone up 90% from Trump's election to December 15th, and it had been down 20% plus. MicroStrategy was off nearly 40% from its peak. Now, of course, we filmed this today on Friday, January 3rd, and MicroStrategy's up 13%. Tesla's
We're back, baby.
And Fartcoin is at all-time highs. So it is now up to $1.6 billion. And also, AI stocks are having an incredible day, one of the best days across the board for AI stocks. So, we'll talk maybe about some of the enthusiasm there. But you're right, David. The big thing to remember is that there has only been one instance throughout market history where the market saw 20% plus returns 3 times in a row. It was during the dot-com boom. We are now in the AI boom. We will see if history rhymes here. But the most important thing is just going to be whether or not we see kind of the promised earnings growth this year across the market. We're trading at 29 times around their trailing earnings, 22 times forward. That forward number is predicated on very strong earnings growth this year. So if the market's able to deliver on that, maybe we won't see another 25% return, but you could see a relatively strong year. But if we see a year of earnings growth similar to what we saw in the year behind, we will probably see a year that could be negative returns, right? Because again, it's been constantly setting up to the situation of, earnings are bad this year, but we're going to get a very strong cycle moving forward. So hopefully we'll see that in the year ahead, and hopefully some of the breadth of the market. While we are an AI show, being able to see kind of strong growth across the economy would be a really good development, not just for the market, but for the U.S. economy itself.
Yeah, it seems like kind of on the earnings side, there's some different paths here. We have the hyperscalers, which, when earnings come out in the next month or so into, I think it's early February is when we'll start to get, some commentary from the likes of Microsoft, hearing what are they doing in regards to their spend, but then also, just all the other companies in the economy that are tangential to AI, hearing, are the end users starting to see benefits from there? So we're going to hear from kind of the companies that are investing in the space. And we also want to hear from the companies that are maybe the end users of all this capacity that they're buying from the hyperscalers. And then, of course, you have the NVIDIAs of the world, which I don't think we're going to get their earnings until the end of February. So we have a bit of time, although I know we're going to be talking about NVIDIA in just a little bit. We'll still get some news from them in the next couple of weeks. So lots to look forward to. I'm certainly excited for the year ahead. I told you before we started recording over the holidays, I visited with some family, and some of them work for a fairly large bank, and AI came up, and they were like, oh yeah, we're not even allowed to talk about or use that at work. So this is a very large publicly traded company that is basically throwing their hands up and like, yeah, we hope to maybe do something with AI. So it kind of just hit home with me. We're still very early in the adoption. I'm sure anyone listening to this podcast is maybe a bit of an AI nerd. I know you're maybe the chief AI nerd, but it underscored that we're still very early in this, and there's lots of misconceptions and people still learning about this. So It feels like even though AI, I think for a lot of investors was a big story in 2024, I don't know if we've totally hit that mainstream where everyone understands what we're dealing with. So it's going to be fun to cover it on this show. And we're certainly glad to have all of our listeners along with that journey. So I wanted to dive into a story that I alluded to that came out, I think we recorded 2 weeks ago, maybe later that afternoon. OpenAI was doing their, 12 days of Christmas, or doing all these product releases. And one they saved towards the very end, we didn't get to capture in our show, was the release of a new model that really raised some eyebrows. So I was hoping that you could kind of walk us through what was it they released and why is it so meaningful? Why are so many people commenting on this new model?
Yeah, it's really unfortunate. It did come out right after the show. I would have loved to have talked about in the prior episode because this is a very big deal. So we're going to spend a little time breaking this down today. And, the biggest breakthrough in AI, it was a new type of AI models. Transformers. We've talked about this. They were first, the paper on them came out in 2017. And it essentially, we walked through this in our scaling episode, if anyone wants to go back and listen to more in-depth discussion on, but it started basically a relationship with AI models, these large language models, where if you're able to train on more data and you're able to give it more compute, specifically GPUs from NVIDIA, we have seen kind of a linear relationship between those two in the gains of the quality of the models. And that's roughly called scaling laws. And it's at the center of kind of this AI boom. So the question has been, how long will these scaling laws last for? How long are we going to be able to see this kind of almost predictable, growth and quality of AI models? Now, I should note, we're used to kind of these laws in technology around different technologies getting better, right? The most famous one that we've talked on the show before is Moore's Law, which is the growth of transistors. But often, while we're making technologies better, we have to really change the process of how that happens and kind of the technologies behind the law. You look at Moore's Law and processors. David, you probably remember if you were around for the dot-com bubble when you used to buy a computer, it would be marketed as 233 megahertz, right? 733. And what that was basically clock speed is what it was. And the path to being able to make processors better was being able to market higher clock speed. Now, what happened was around the middle of the 2000s decade, 2005 or so, it really became apparent that if we just kept taking the clock speed up, processors were going to fry themselves. We needed a new path forward. And what happened was essentially processors were rebuilt instead of being a single core. Basically, we adjusted how we did software to do multiple cores in processors. So we hit a wall, but we found a new scaling law. Moore's Law continued the number of transistors, but the process, the way that we were achieving Moore's Law completely changed. We're looking at a similar situation right now in artificial intelligence, where we have a scaling law where we are getting better models. But how are we achieving that is changing rapidly. And the newest example of that is OpenAI's new model, which was released on December 20th. And it's the newest version of what we call reasoning models. So let's talk just a minute about what's so impressive with this model. And then we could maybe pull it back low and talk about what reasoning models are. So I've got some details here that we're going to look at just what's so impressive about O3, which is the newest model from OpenAI. There's a test to measure whether AI models are as smart as humans across kind of a range of, you'd almost look at them and see them as visual problems. It's named ARC-AGI. It's designed to be easier for humans and hard for AI. And it's proven really hard for AI systems to crack it. So GPT-4, what kind of began this age of AI because it came out and everyone said, wow, this is really good. It's shockingly good. It scored 2% on ARC-AGI. And the magic number where you're at a human level is 85%. The creators of ARC-AGI, they were hoping most optimistically it might be cracked in 2028. They were thinking kind of a realistic scale would be 2030. OpenAI's newest model scored an 87.5. It scored higher than that 85. So here's a quote from the creator of ArcAGI. He said, OpenAI's new O3 model represents a significant leap forward in AI abilities to adapt to novel tasks. This is not merely incremental improvement, but a genuine breakthrough, marking a qualitative shift in AI capabilities compared to prior limitations of LLMs. David, another big test is called Frontier Math. It's basically a collection of the hardest math problems possible to devise. You look at them and your brain melts a little bit just trying to comprehend how you could even begin to solve them. Prior to this new OpenAI model, the best that state-of-the-art models could do was solving 2% of frontier math. This new OpenAI model can solve 25%. Another key area when we're just trying to demonstrate what a leap forward we're looking at right now. If you play chess, you've seen ELO scores before. Basically, it's a 4-digit measurement to show how capable you are at playing chess. And there is an ELO score that's basically a competition amongst programmers. They put O3 into this, and its score jumped from 1891 to 2727, meaning this new model from OpenAI scored higher than 99.95% of all programmers in the world. And believe me, it's probably even better than that because you're only taking that test if you're pretty capable. So, David, I don't think any superlatives I could really offer do what we're seeing justice. I follow dozens, probably hundreds of people involved in AI research. And the reaction on December 20th was something of complete shock. The progress made by this model was more significant than anyone imagined. And the outcome from this is now, it's pretty clear by the end of 2025, maybe 2026, it's going to be hard to design benchmarks that, we're able to have intelligence higher relative to AI. We're not going to be able to effectively test these systems anymore. And once you can design a benchmark. You can always, if you design a benchmark, researchers are going to find a way to optimize towards it. The true test of what you call AGI or artificial general intelligence is that you're unable to design a benchmark anymore. And we're getting really close to there with this new style of reasoning models. So the good news for anyone listening today to this podcast is kind of to the point what you said about your brother-in-law and still not using AI at a bank or not being allowed. 99.99% of the world doesn't understand what's coming, the scale, the scope of the changes, how rapidly it's progressing. If you're listening to this podcast, I truly think just by the merits of being this interested in AI, you are probably in the 0.01% of what could be rapidly developing into the biggest breakthrough in human history. But, David, it is just, and we could pause here because I know this is biting off a lot. This is very big, but I think December 20th is going to go down as kind of a date where if you are in a small group and you're watching people in the field, it was extremely obvious that we are on a new trajectory. And we've gone from, in a matter of months, people asking, are these scaling laws dead? Could this actually be where an AI bubble breaks, and that being a common thing, to now question being, are these scaling laws that are present, these new reasoning models being built, are they more powerful than we can imagine? And what are the implications of that? So, I'll pause right here to give, you a chance to, ask some questions, but this is extremely significant, probably the most significant news we've ever seen since we began creating this podcast to document, the path of AI and the growth of this trend.
And we should say the model that was released was a bit of a demo. So before anyone of our listeners runs off and signs it to ChatGPT is like, I got to get my hands, it's not available yet. Yep. Have they given a date on when this might roll out in some limited form, or when will this model at least, be able to be tested a little bit more rigorously than like, oh, it's a great little demo. Obviously we have the test scores, but when will this be in the hands of people? Have they said that yet, or is it still kind of TBD?
Well, this is where we need some caveats to some enthusiasm. The cost for the high tune model, the one that was able to score 87.5 on ArcAGI, it costs about $3,000 per task. To get it to the performance that I achieved in ArcAGI, You need 10,000 of NVIDIA's prior generation best GPUs, H100s, for about 10 minutes. So, David, that's kind of the downside in a way, that we have this kind of these models that are getting to be able to potentially solve problems in a way beyond human comprehension, but they're going to be incredibly expensive. One comparison that I've seen described for this is, we built a jet engine, but we still haven't begun designing the plane, right? It's going to be a lot of work to be able to begin applying them. Now, on the other side, inference and how these models are largely getting better is using new forms of inferencing. The cost of inference in the last 3 years dropped by 1,000-fold. So I'm talking about this model right now costing $3,000 per task. If it falls by the same rate that we've seen in the prior 3 years, that would imply going from $3,000 a task to $3 a task. One quote I saw was from Aaron Levy, who's the CEO of Box, and he said, OpenAI's O3 model appears to be better at reasoning than any other model out there, costs way more to operate, but that's irrelevant. What's expensive today is cheap tomorrow. Quality is all that matters, because that cost will always drop. So I think from our perspective, how long till you're going to be able to work with something at the level of kind of the high-tuned O3, it's not necessarily coming anytime soon. OpenAI, they had originally announced their video model, Sora, and people were like, whoa, blown away by this. When can we touch it? Well, it's been a long process, because they wanted costs to come down before it was going to be commercially viable, right? In the meantime, you're going to be able to work with prior reasoning models like O1 that you actually can get subscriptions for and work with them right now. But, again, David, for our sake, what we begin asking for at a moment like this is, how is this going to impact everything that we're buying? If there's a kind of new way of building super intelligent models, what are the changes in how we're looking at investments? And we'll have a couple implications of that, today.
I mean, I'll certainly leave a lot of the conclusions for you to draw, but it does seem like, as a company like OpenAI continues to raise the stakes in terms of the capabilities of a model, it puts a lot of pressure on the competitors who are also trying to build their models, and kind of this general sense of, how much do we need to keep investing in AI, even if we haven't seen kind of the full ROI. It feels like that pressure continues with the release of something like this. And maybe, we're not going to read into just a couple days of the market, but this enthusiasm to start the year, I do wonder how much of it, we're seeing a lot of these infrastructure type plays in the AI space doing quite well the last couple of days. When you have a model like this that grabs so much attention and people really see, wow, this raises the stakes, everyone needs to keep investing in this space. It seems like that might be some of the narrative driving the market these last couple of days here.
100%. You're working with two things. When we look at AI right now, we're looking at what's the revenue side. And if you're a Microsoft, you're a big company with, specific targets from Wall Street, what kind of ROIC are you saying you're getting from this? How are you justifying your spending? And then we're looking at the FOMO side of an arms race, creating a new kind of paradigm for intelligence through AI, which is what it appears we're seeing with these reasoning models, ignites that arms race. And there's going to be a lot of work, which, we'll talk about some new releases from NVIDIA and some other stocks benefiting from this. But there's going to be a lot of catching up to this. Now, I should also note one thing I thought was hilarious. I talked about December 20th maybe kind of might be a date that we look back on as the date that we kind of hit a new inflection point with AI, that this concept of AGI, we weren't officially there, but we were kind of a soft launch towards it. If you picked up a Wall Street Journal the next day, the headline, I took it down here, it's "The next great leap in AI is behind schedule and crazy expensive." Well, as we talked about, David, it is crazy expensive. But to me, this is a little bit like the day after the moon landing, the New York Times had a headline, "Trip to Mars still behind schedule," right? I think celebrating the achievement of what we're seeing is a lot more important at this moment. Also, if you're wondering, again, you look back at past trends and go, that was so obvious. How were you able to make so much money on it? And it does come back to a lot of the negativity that's present at the times. It appears very clear that we might be again on the precipice of a massive breakthrough that's going to see incredible, gains and progress throughout 2025. And again, the headline from the paper of record for finance is AI is behind schedule and expensive. So I think that it does a great job illustrating why these situations can be so lucrative. Well, it might look really obvious in hindsight, right?
Yeah, I want to move on to, you mentioned NVIDIA. I want to talk a little bit about them. But yeah, it's going to be fun. I always say the comment, every 2 weeks there's something new. We had exactly 2 weeks. We had the O3. It's only been 2 weeks since then. And even the enthusiasm, I follow many of the people that you do. That first couple of days, people were like, I can't believe what I just saw. You probably, if you go to cnbc.com today, it's not on the homepage still. No. So it's going to be a story that's going to be interesting watching as we is that the rest of the plane built? What do you say? We have the engine, but we don't have the rest of the plane built. Yeah, I think this year it's going to be interesting to see, who starts building that plane. It feels like now is the time that we're going to start seeing some really impressive things. So, but let's talk about the most impressive company in AI. That is NVIDIA. I mentioned we're not going to get earnings from them until late February. So that's a lot of time. The narrative shifts so much with NVIDIA. A couple of weeks ago, it was like, oh, NVIDIA's already in a correction. It's down 10%, is maybe Broadcom eating their lunch. And now it's, we're right back almost to $150 a share, a price that it can't quite get past that too far. I wanted to hear what's the latest news from NVIDIA, and what are you watching in this time between now and earnings from the company?
Yeah, so NVIDIA, they are absolutely relentless. And it's one thing to be a company that any company that's as big as NVIDIA needs to get lucky, right? When NVIDIA was founded, its leader, Jensen Huang, he was never thinking about this level of GPUs, right? There's some luck, but there's also, again, some tenaciousness. And we've talked a lot about NVIDIA's moving towards Blackwell, which, people think of it as a chip. It's really a system approach to, be able to protect NVIDIA's competitive advantage, but also continue driving you'd call it total cost, TOC, down for, these AI applications. So the scale out right now has been GB200, which is the first systems that they're shipping. They got a little bit of revenue contribution from it in their last quarter, but supposed to begin scaling this quarter. Now, generally you'd see a much slower cadence between, a next major launch. You might have some kind of secondary launch next year, what you'd call a GB200 Ultra, something like that. And then you'd have a new architecture the year after. NVIDIA is trying to accelerate everything as much as possible. They're doing something that's almost never been tried before in semiconductors. And what they're launching is an update to GB200, and it's going to be called GB300, and it's supposed to be ramping already in the third quarter. Now, what's particularly interesting about this is there's been some analysis on it from SemiAnalysis, which is probably the best researcher in the space around semiconductor matters. And it was glowing in how effective this is. So if we're looking at it, it's an upgrade that specifically is much better for these reasoning models that we've been talking about. They believe that its economics per token using NVL72, which is part of this system, is 10 times better on these reasoning chains. So what's going on here is there's something called chain of thought. How this reasoning works is effectively you have a problem and the AI model uses chain of thought, so it's able to think. And as it's thinking, one of the big complaints about AI is it spits out nonsensical answers. And what it's able to do is if you're in a field that's verifiable, like coding or math, it's able to, if it gets to a wrong answer or a dead end, it's able to go back and retrace its steps. And this is partially what makes this reasoning so much more effective. Also, it's creating new training data because you're able to get training data. So you're able to solve this problem that we've talked about before, of having less data available. Now, the problem with this chain of thought structure, it has incredible memory demands. So what NVIDIA is doing is they're going to launch this new system that is really a lot stronger on the memory side, which is one of NVIDIA's greatest weaknesses against AMD and also against Broadcom, frankly. So again, it's hard to really capture how aggressive it is going for another launch this quickly. But what semi-analysis believes is that all of the hyperscalers are now going big into this GB300 upgrade. It's released at just the right moment where it's optimized for these reasoning models, right as we're getting this new O3 results. And this is probably going to lead to a lot of momentum for NVIDIA, specifically in the back half of the year, not just for their chips, but also for their networking revenue. So, David, we've seen NVIDIA shares up 5% today. I think they were up 3% yesterday. And I'm sure there's going to be a lot of speculation about why the cause of that is. I think the key reason is that there's probably a lot of research notes coming out from Wall Street extremely impressed how aggressive NVIDIA is. They've got this lead and everyone's saying, are they really going to be able to protect this lead? They are doing everything in their power to a degree that you've never even seen before from a large semiconductor company to be able to keep this pace up. So if you're someone who owns NVIDIA, what they're doing right now to cement their lead across, again, a new kind of paradigm, a new scaling law coming up, you couldn't ask for anything more. It is extremely impressive. And again, I think it's what's led to the recent gains for NVIDIA and speaks very well for them to deliver once again in 2025 after, let's call it what it is, beyond belief 2023 and 2024, right?
So we obviously own NVIDIA in the AI portfolio. I think I'm not sure what our blended kind of cost basis is, lower than what it is today. So if someone's sitting there, again, I mentioned earnings coming in a couple months. This is a company that has had an enormous run, and it hasn't had a lot of these like air pockets down on earnings where it's like, usually you see these large companies that have explosive growth. You might have earnings where it's like, oh, it's off 18%. It's not unusual. NVIDIA has not had that. So if someone has been sitting watching NVIDIA, is this still a price that's reasonable? I know we've talked a lot about looking forward to the 26 earnings. What would the PE multiple look like there? What's kind of your just general feeling? I'm assuming you're still confident kind of holding the stock right now, but do you have any different opinion on if someone's kind of, I've been thinking about it and I just haven't gotten in yet?
Yeah, I mean, I think if you didn't own NVIDIA, I think you should be able to relatively confidently add to them right now because, a lot of the concerns have been how the competition from specifically Broadcom, but Broadcom is designing custom processors at the behest of these large hyperscalers, giving them optionality beyond NVIDIA. NVIDIA just kind of stepped in and said, we have something so impressive, you cannot afford to not buy this. And all of them have apparently said, yes, you are right. And we're going to see a relatively large cycle in the back half of the year. So, I mean, this probably begins pushing the cycle into 2026, which was our unknown zone. Mm-hmm. And again, reinforces the long-term strategy that NVIDIA has been pursuing around the systems approach, because it certainly looks like a lot of the networking technologies that they've built for these Blackwell systems are part of getting latency down in memory and part of being able to provide a superior system. And again, it just starts beginning emphasizing things that other competitors can't really copy easily. AMD can't copy this. The closest thing that can try that has, the complete offerings between networking and chips is Broadcom. But again, I think this really probably blunts some near-term momentum from Broadcom in a way that I think the hyperscalers are really going to be focusing in the back half of this year and trying to get as many NVIDIA systems as they can, because this is an outrageously competitive offering. So I think how you felt about, if you were a 6 feeling about NVIDIA a couple of weeks ago, the developments around these reasoning models, a lot of headlines might say it's inferencing where they're weaker. NVIDIA's kind of taken some perceived weakness and they've kind of judo flipped it. It would appear they're definitely getting to have this very well. If if you were a 6 on a confidence scale, I would feel like the past 2 weeks have to take you up to an 8. They're just, it's a trend that might be unlike anything we've ever seen before, and it's a company operating at a level we've potentially never seen before.
Yep, just your friendly reminder of that NVIDIA was down 70% in 2020 or into 2023. Just incredible to think about the change that's happened in the market the last couple of years. Again, really since that launch of ChatGPT is when it really took mainstream, and all the hyperscalers really got on board and really started spending with NVIDIA. So just a truly incredible story that we probably can't talk enough about. It just incredible. Now a $3.5 trillion company. The question, I guess, will start to be, will it get to $4 trillion in a race? Maybe, Microsoft. We'll see. They've had not as good of 2024. Still good, but we'll see if they maybe close that gap into 2025. So there's NVIDIA. It's in the portfolio. Let's talk about a company that we're adding to the portfolio. We do have a new company that we're kicking off the new year with, a new trade. Why don't you tell us a little bit about the company that we're adding now?
I thought this was a very light show, lacking in any nerdiness with a chain of thought, reasoning models, all that. So I decided let's also dive into semiconductor equipment. So we're going to be adding Lam Research. It's been down about 8% in the past month. It's gaining a little back today as we record this. But 36% from July 10th. I've talked about, David, the semiconductor equipment industry and historical returns and why it's relatively attractive. You look at this industry, it's about $133 billion in size. There's a general rule of thumb that however big the semiconductor industry is, this is going to be about 15 to 20%. And all the major companies in it have seen outstanding returns the past decade. And the reason for that is you have a lot of different kind of verticals within semiconductor equipment. And generally, you only have 2 or 3 major competitors in each vertical. So if we look at the 5 biggest companies, we've got ASML, which we've talked about before. That's the monopoly on cutting edge lithography, transferring the chip design onto a wafer. We've got Applied Materials, which has the most broad portfolio. We've got Lam Research and Tokyo Electron. They're involved in etch and deposition, which we'll talk more about momentarily. And then KLA, which dominates metrology, which is looking for defects in chips. Now, between these 5 companies, they're $93 billion in revenue, and I said it was about $133 billion in size. So you're able to get roughly 2/3 of the industry just looking at this group. I always want to start kind of giving the high-level overview of how you start attacking kind of an opportunity. It's trying to understand from a high level what's going on here. So let's dig into why specifically we're going to be singling out Lam Research today. It's a company with a market cap of $90 billion. It's got $15.6 billion in revenue, $4.1 billion in earnings. So that's pretty attractive margin profile, $4.8 billion in free cash flow. So if we look at multiples based off that, 23 times trailing earnings, 19 times cash flow, 20 times forward earnings. Those are all below market multiples. And the reason they're all below market multiples is because on July 10th, there's new export restrictions announced by the US targeting China. That's been an anchor across the entire semiconductor industry, but it's hurt these companies because most of these companies are 40 to 50% sales to China. Lam Research is 42%. These restrictions are potentially painful. We've probably seen kind of a pull forward of demand, which could complicate things in the year ahead. But again, David, we're being compensated with a stock that's 36% cheaper that, across the past decade was a company that grown 600% and maintains a very dominant position. So we're going to take some of that pain today for, the potential for upside as they work through these restrictions. So let's talk about what Lam Research does. I talked about deposition, etch. It's their 2, biggest specialties, 2 massive markets. ASML gets a lot of attention. Lithography is about 22% of spend for semiconductor equipment. Deposition is 28, etch is 28, and there's subverticals there, but these are big areas. What etch does is lithography transfers the chip design. You still need to engrave the design into a wafer. That's where etching comes in. The other thing is chips are going 3D in multiple directions. Memory that's specific to AI, we'll talk about this, it's stacking 3D, but transistors are also going 3D as well. They're getting more and more complicated to build. And that's where deposition and adding all these layers comes in. So Lam Research has 4 different opportunities that they see becoming billion-dollar opportunities around growth areas. So the first area is technology around making transistors more intricate. It's called gate all around. And that's going to benefit them tremendously. The second is they've developed a dry film that actually reduces the demand for ASML's machines. So part of the reason ASML has struggled a little bit is what you call the intensity, the need for their machines has decreased in part because innovations from Lam Research. The third is a technology called backside power. I'm not going to get into that, but it is something should benefit from AI. And the last is advanced packaging. I do want to spend a little bit more time talking about this because earlier I talked about this need for more memory from these AI models. And, why do you need more memory? Because you're having to store the parameters, you're having to store all the work that you're doing in inferencing. It's just incredibly memory intensive. Mm-hmm. And there's a special kind of memory we've talked about on this show before. It's called high bandwidth memory. And what you do is you essentially stack the memory on the logic die. So you're stacking the memory on top of the chip from NVIDIA or Broadcom or AMD. And then you're basically drilling through it to directly connect. Well, it happens that Lam Research is a leader in this space. And their advanced packaging for this new type of memory, it grew from about 300 million to $1 billion this year. And the forecast for this HBM market is going from something like 15 billion to 100 billion by 2030. So right now, this is only 6% of Lam sales, but it could be an incredible tailwind at their back. And it's just one of the 4 opportunities I talked about earlier. So David, a key theme that we've talked about is being responsive to changes. As we're seeing something like new reasoning models spin up. What does that change? Well, if it's changing memory and people are saying that there's a good chance that memory is going to actually outgrow kind of chip sales for AI, well, we want to be responsive to that. So we're making kind of investment targeting this opportunity. We're going to put $10,000 in Lam Research, and I'm going to continue looking at some opportunities in the space. There's some pure play companies entirely focused on advanced packaging, and there's other companies in the semiconductor equipment space. But I want to make a first buy that was topical to what we talked about on today's show. And I want to make sure if people's brains weren't full from talking about reasoning models that we got even nerdier at the end, David. So that's why we're adding Lam Research. And I don't think this is the last stock we're going to add. If this semiconductor equipment attracts its 15 or 20% of semiconductors, you want to have some exposure to that in the portfolio. So we will continue looking for opportunities.
I mean, you mentioned the market kind of adjusting for the changes with sales to China. Mm-hmm. And, the outgoing administration has had some combative relations with China. The incoming administration may also, unclear whether it's going to be play hardball with China or maybe it'll be relaxed. Is that, are you viewing that as that's not going to be resolved? Or is that any part of your thesis on that part of the business changing? Or do you feel like it's, we have enough exposure to these other areas. If we hit an inflection point in one of them, it doesn't really matter if their sales to China are kind of permanently damaged.
Yeah, Lam, there were some new export control measures that were announced, and they came out and said, we are not updating our financial guidance. So I think partially pessimism is probably a little overpriced in the stock right now. The second thing is, how'd you read into how Trump's going to react to China? Man, that's a good question. I do think one thing is, his administration is much more likely to want to make a deal and potentially have some concessions to be able to get a grander trade deal in other areas. So I think it's hard to play any specific theme around geopolitics, but I do see some scenarios where their environment is actually better in the next 4 years than it will have been trending in the last 4. But we'll have to monitor that, and frankly, we have to monitor it for a number of stocks in the portfolio. And we talked last week about how Broadcom they have a deal with ByteDance, which is a Chinese company that owns TikTok, to design custom chips, and that could be very meaningful. The number 2 buyer of NVIDIA chips last year, even though NVIDIA has to sell different chips to China that are not as powerful, the number 2 buyer of NVIDIA chips last year was ByteDance. So we're kind of having to watch the situation across the entire portfolio. And while Lam Research has taken the brunt and other semiconductor companies, this is weighing on kind of every company across the portfolio right now.
All right. Well, that's Lam Research. Next episode, I'll make the promise that we'll do kind of a quick review of the portfolio. If we have any new listeners and you're kind of wondering what is this AI portfolio they're talking about, a few months ago, Eric took $500,000 of his own money and kind of agreed to manage it in full view of the listeners of this podcast. So next episode, we'll do a quick review of the portfolio, kind of where it stands. It's been a good couple months. We've had some winners like Credo, really a lot of winners actually in over the dozen companies in the portfolio. So we'll be sure to give a full review of that. And speaking of reviews, if you haven't left us a review on Apple or Spotify, we'd really appreciate it. Go give us the stars, give us a quick little paragraph on what you find interesting about the show. That would be great. For Eric Bleeker, I'm David Hanson. Happy New Year. We'll see you in 2 weeks. People on the show may have interest in the stocks they talk about. This is not investment advice, so don't buy or sell based solely on what you hear.